The easy way for us to tell is to look at this channel, right? So see this upsloping, the bottom line, that's kind of keeping price in check. As long as price stays in here, I think you favor neutral to upside, maybe here or here. But if you break this line, this is a definitive trend line connecting all these lows. That's where I think you start to flush. You'll probably get a small bounce at the previous 2017 high and then eventually break through that. So I think, again, yeah, short-term neutral to positive on Bitcoin from here. And then again, later this year, you got to expect one more flush out. And it probably will be the nastiest and the worst in terms of fear, because always the end of cycles are the scariest, right? Where things, imagine seeing Bitcoin at 12 or 10,000. Everyone's going to start to doubt, like, will Bitcoin survive? Can it survive? That's when you actually, as an investor, need to start thinking about really buying into it. So I think the narrative right now is, and what's interesting for me is that you can see the kind of the angle on Bitcoin's been very sideways to slightly up. It's not been vertical bouncing. And I think part of that, and what's interesting is if you look at the NASDAQ's really ripped up, and those usually coincide. So a lot of people have been saying, well, why hasn't Bitcoin had a big move up like the NASDAQ instead of just going slightly up sideways? And I think the answer there is that, with Celsius and Voyager and all these other ones, you have a lot of money that's just scared. Like, who wants to put their money in with these brokers and be in crypto when who knows what the next shoe to drop is, which broker is going to go under, which one's going to file for bankruptcy. So I think that's kind of keeping a lid on the upside price in Bitcoin as well. But I think later this year, that narrative is going to shift to that panic sell-off. And I do think the final flush out will be something major. I don't know if it's Michael Saylor and MicroStrategy's finally throwing in the towel and dumping their Bitcoin at like 10,000. Maybe we see a bigger broker go bankrupt. I mean, all these possibilities are there, but I do think more is going to happen before you get an ultimate bottom. If past cycles are any indication, and we can go to the 2017 cycle here. So what's interesting about the 2017 cycle is you kind of had this period where we had the big dump out, and then you had this lots of chop for a while, which could be what we're doing right now. I'm not sure, but that would make sense if it were to go till like October, November. And then you had this final flush out. And then notice how it took a while for it to kind of digest before finally starting to make that next move up. So again, if you look at this final flush, it kind of bottomed out in December of 2018. And then the next move up, you could arguably say, kind of started in April. So my guess is you have about 6 months of chop around the lows where you have people that are saying, this is the worst. And then you have people that are nibbling, maybe smart money starting to buy down there. And you get that kind of exchange where neither side is winning. They're just exchanging shares from people that are fearful with people that are buyers and saying, okay, this is the right time to accumulate. So my guess is, yeah, you'll see usually bottoms, you'll see a lot of chop as the bottom is made.
So it's safe to say you will be shorting.
Well, so this is actually really interesting. And to be clear, like, if there's one thing I know, it's that it's very hard, and it's very hard for me to pick exact bottoms, right? So like when we were down at 19,000, I basically announced that I was going to be buying my first HODL position out of a multiple, right? And the idea there is that, I basically in my head, I love Bitcoin long-term. I'm such a big bull long-term, even though it doesn't seem like that. I'm just a chart guy. So if it tells me it's going down, I have to go with that. I can't, make believe. So basically in my head, I'm like, okay, I'm going to put X amount of money in Bitcoin as a HODL position at some point. And at 19,000, I put like 1/6 of that to work. And the idea there is that basically I do believe it's going to go lower, but just in case it doesn't, I do want some skin in the game to participate on that upside. So basically 1/6 in at 19, if it dropped another 2,000 to 3,000, I do another 1/6, another 2,000 to 3,000, another 1/6, basically dollar cost averaging all the way down to like 10,000. And then the way I look at it is like, even if it goes to 10,000, if my average price is 15,000, and it's going to 100 or 150 or 250, like at that point, it's a rounding error, So again, I think investors need to really be aware that even the pros, it's almost impossible to pick the exact low. So why try? Just kind of generally say, okay, well, this is a good level if I have that long-term thesis, and then you just start to kind of dollar cost average in. Yeah, so I think, like, for me, number one is I think that Ethereum is going to survive. I think it's got enough built on it where it's going to survive. The question is, how low does it go? And I think, again, in terms of the chart, what's amazing about the chart is we have hit resistance here on Ethereum. You can see these pivot lows right here. And then look at exactly where price went. It pulled back. Now it's trying to break through there. If it does break through there, maybe we get up to this 2000 level. Maybe an off chance we get to this downsloping line, which connects all the recent highs. But the bottom line is, to me, this is just an interim rally before another leg lower. And the key is, where are we going to go? And my guess is you're looking at like $650 or so. I think that would coincide nicely with the 12 to 13,000 level on Bitcoin. So I do think, again, you have that potential downside, but this is, again, one that I think will survive. So it's one that I'm very interested in kind of hodling at the right levels. I don't have any yet. I was actually going to buy my first one at like 830 right here. There was this little pivot point right here, and it just never got there. It never got there, so I didn't get filled. But the bottom line is, as a trader, you learn very quickly that you'll miss a bunch of trades, and that's okay, because there's always more trades coming around the corner. Like, a lot of the kind of the retail crowd is always like, oh my goodness, I missed a trade, I got to chase it now. I'm just like, you know what? Missed a trade. It's just another one of the thousands that I've missed in my trading career. But you know what? I only have to catch this handful, and I'll make great money. And anytime I let that discipline slide and I chase, I almost inevitably can guarantee that's my losing trade. So I mean, per the last Federal Reserve meeting a few weeks ago, we basically had a little bit more of a dovish Federal Reserve tone, right? So they raised the 75 basis points, which is what the market expected. But in the conference, it was a little bit more dovish. That created this massive move up in the tech sector. We saw stocks and the S&P just rip higher, right? Now, interestingly enough, we got the jobs report this morning, right? So the non-farm payrolls came out. It came out over 500,000 new jobs. And that kind of made the markets freak out a little bit, because I think the markets had thought the Federal Reserve was almost done raising, if not done, and expected a weaker jobs report to kind of confirm that they were on the sidelines. With this better than expected jobs report, I think it puts September in play for at least 25 basis points, maybe 50 basis points. And that has the market, again, a little bit uneasy that the Fed is just going to keep tightening monetary supply. Now, for me personally, I think that the jobs numbers are lagging. So I think that, again, you're going to see more and more weakness coming in the coming months. So maybe the Fed raises in September a little bit, but I really do believe that's it. I think that'll be all that there will be, because I do think we'll be in a defined recession. I mean, even now with the GDP numbers, you could say, yeah, we're in a recession, but the jobs numbers kind of go against that. But I do think by end of year, there's no doubt about whether or not it's a recession.